Everyone come on in.
We're good.
Everything's live.
On YouTube.
Everyone's live.
We's on the tubes.
Starting at 0. Here we go again, guys. So we are here to talk about home loans. Ask us the questions about interest rates, programs, what's going on in the market, what to expect in the future, everything that's on your mind. If you ever thought about buying a house, how much down payment, what credit score do I need? Everything here, guys.
You have to watch here because I can't. This is gonna.
I'm watching, man. I'm watching.
All right.
We got Dennis in the house. What's up, Dennis?
What's up, Dennis?
So already out the gate, Dennis, with the likes. I love it, man. We're gonna try to get to 5,000 and then 10,000, and we're gonna push this thing as far as we can every single time. Okay, Dennis. Thank you for the love. We appreciate it. Dana, how you doing? Carl, how you doing? Grace, how you doing? Chewy, how you doing?
We're gonna teach you guys how to get a house. 2024
today.
A little frog in my throat. I'm
So
not done yet.
he's not done. He's not done. Oh. So don't forget to ask the questions, guys. We want to help you guys in your home loan journey. There's a whole lot going on in the markets. There's a whole lot going on across the country.
CPI just came in horrible.
And then there's that.
Horrible today. Horrible. Like really horrible.
What is CPI?
Consumer Price Index, and it's probably the second most important number that the Fed looks at when they're determining whether or not to drop interest rates. But CPI, what they're waiting for is inflation to get down to 2%. That's what the goal is. They've actually stated that.
Dennis the Tech Guy, you guys know how I do. We love it, man. Cisco V, do you guys own multiple properties? Yes. What's your questions?
Yes, we do. What can we do for you?
Cisco V.
Yeah, we can. So we're experienced because we own rentals, Airbnbs, raw land, second home. We have stuff. So we know firsthand how these things work. We've gotten the loans for them. We do the loans for them. We do a lot of loans, like a lot. So we help. We just funded one from Aurora, by the way.
Oh, sweet.
Second ago.
Yeah, so that means that you guys that are chiming in here, you guys are going in, filling in the app and the link above, and getting the home loans closed while we're on air.
Yep. So we are here to help you get a house in 2024. There's some kind of not great news, but I want to wait till more people are on because this is kind of not great news if you don't own a home. Kind of not great news. But if you're in the process of buying a home, then it's kind of great news. And here's why.
Candy with the K, man. Candy with the K.
Candy with a K.
How much do you recommend having for a down payment for a first home?
Well, Candy with the K. Candy with a K. FHA allows 3.5% down. 3.5% down. So for every 100,000, you need 3,500. If you're buying a $300,000 house, you need about 10,500, somewhere in that name. So 3.5% down. Now, as you do your research, Candy, you're going to find out that there are 0 down programs, and they sound amazing. They do. They're like, hey, why don't you come over to my program? It's 0 down. It's 0 down. But Candy, here's a little bit of experience for you. The 0 down programs, they exist, but they all have a catch, some type of catch. So I'll give you one of the catches. This is the most one that shocks the most people. This one? Yep. This one shocks the most people. I'm like, hey, I got you qualified for $400,000. You bringing in 3.5% down, $400,000. Go shopping. Hey, Lee, you said you were going to get me down payment assistance program also. Yes, I did. I qualified for you for a down payment assistance program, $320,000. So if you want to use a down payment assistance program, you're qualified for $320,000. If you want to bring in your own money, it's $400,000. Wait a minute, Lee. Why is it less with the down payment assistance? Well, because they're literally giving you the down payment and there's no risk in it for you at all. 0. So they're not going to let you redline it. They're not going to let you max it. That makes sense, right? And everybody goes, well, since you put it that way, I guess, right? Yeah? Cool. I don't care which one you use. You can do the $400,000 or you can do the $320,000. Oh, by the way, the $320,000 is a silent second. You will have to pay it back at some point in the future. Well, Lee, do you think I'm maybe better off just using my own 3.5% down? That's a great idea. I think that's a great idea. Yeah.
Yeah, always. Rocka. Yeah. I think everyone watching this needs to watch the movie The Big Short.
Oh, yes. Rocka. Hey, I'm on your side. Kinda. Kinda.
Well, it's a good
Kinda.
movie.
It is a
And
it's a
it's
great
truth.
it's a great movie and it's
And it's
truth.
truth.
It's a great movie and it's truth. But Rocka, I got some news for you that's gonna rocka your brain. See that?
I like
Did
it,
that?
man. That's pretty witty.
It's gonna rocka your brain. Hey, the numbers just came in today at who's buying up the single family houses over the last year. Do you know who bought 44% of the single family houses?
I'm gonna say BlackRock.
You'll be right. 44% of the single family houses. Wait, what? Wait, what? You know how they find this? It's not so simple because it's a private transaction in many states. It's not public. But you know what is public? Property taxes. So they can reverse engineer who's paying the property taxes on these properties and what? What? Okay, so what does that mean for the average borrower? Well, if you are a gigantic hedge fund and you are trying to, get a asset that will not depreciate, but I can make money off it during the meantime, what's a good thing to invest in? Well, single family house. Why? Because I can rent it. Well, guess what? If they can buy them all up, they can just make the whole United States nothing but renters, and they get to pay BlackRock every month while their asset continues to appreciate. What? Yeah, that just came in.
Rocco.
So,
When you talk about The Big Short, you're talking about the way that loans used to be done. Okay, I know why you're putting this in there. You're trying to. It's kind of a scare tactic. But the way we were doing loans, not we, but the way loans were being done in the early 2000s are not the way they've been done in the last close to 20 years now. So that bulk of loans that crashed back then does not exist today. But anyway, watching The Big Short, I think is a great idea.
it's a great movie. It's a great movie. Yeah, it's really good.
Dennis, if you transfer an FHA appraisal from another lender, is it always accepted by the new lender?
That's a good question, Dennis. That's a very good question. Not always. Not always. Sometimes. Most of the time. But not always. Here's why. Because the banks have to follow that Big Short movie that they were talking about. The way they eliminated it from happening in the future is they made a whole bunch of layers of laws and rules and guidelines and stuff so that it does not happen again. Thank you for all the hearts. Whoever's
Yeah,
doing that,
more
I
of those,
appreciate you.
please.
Yeah. So here's what happens. Back before the Big Short, and this is what the movie was all about. There was loan officers who were, dancers. And they were dancers and they were also loan officers and they owned multiple houses. Spicy dancers. Right. And they would own like 5 houses. And they're like, well, how can you afford that? And they would just lie on the application. They'd say, hey, I make $300,000 a year. And then the loan officer would go, hey, I guess I make $300,000. The processor would say, oh, I guess I make $300,000. The underwriter would go, hey, if everybody says they make $300,000, the bank's like, hey, I can sell this in a package security, so I believe they make $300,000. Let's give them that new house. That's what happened. Well, in 2008, 2009, 10, there was a law passed called the Dodd-Frank Law. And the Dodd-Frank Law put very strict verticals in the mortgage industry. And the first barrier to entry is us, the loan officer. So as a loan officer, you have to pass this test. It's a really tough test, by the way. Really tough test. And you have to do an FBI background check to see if you have moral turpitude, which means, do I steal money? And if you, like 80% of the loan officers that were in business couldn't do it again. They couldn't pass it. So we lost a bunch of loan officers there. Cool.
What's that?
I don't know. It sounds like
we got
noise.
sent something. It was crazy.
That's pretty cool. Whoever sent us that, thank you so much. I'm going to keep educating you. So there's that very thing, that vertical, that barrier to entry, which is us, the loan officer. But we only get the first part of the loan. As soon as we package up the loan, we send it, and we have a license number, and we have to pay every year, and bonds, and all kinds of different stuff. So then we pass it to a processor. The processor has their own license number and their own way of doing things. And once I pass it to a processor, I can't change that loan anymore. Whatever I package that loan, that processor now has full control over the loan. And I can't anymore. I can't go, oh, let's erase that. Oh, let's put that in. Can't do that. It's packaged. It's off. So then the processor says, hey, I'm about to submit this to underwriting. And then they technically submit it to underwriting. Once they do that, they can't move the loan anymore. So this is one of the ways that they made sure that people are going, hey, trust me, bro, that house is worth $500,000. Just trust me, bro. Well, the one other way that they would do it is before the laws get implemented, the loan officer would call an appraiser and go, hey, listen, I really need $500,000 on this house, man. We're going golfing this weekend, right? Yeah, cool. Hey, can you make sure I get $500,000 on this house? And that was happening like a lot, not a little bit, a lot. And the way they stopped that is it's illegal for me to talk to an appraiser. I actually have to use a third-party company called a AMC, appraisal management company. I have to use an AMC to communicate with an appraiser. And I say, hey, listen, we'd like to start this appraisal through the appraisal management company. They cool, I'm going to assign an appraiser. And then I'm not allowed to talk to that appraiser. It's illegal. So the appraisal management company and the appraiser has to be approved by the bank. So each bank has to go through and go, hey, I'm going to vet this AMC and I'm going to approve this appraiser. And once I do, I am taking the risk that this appraiser is doing their job correctly. Now, appraiser has a license number and they have bonding and everything like that. So whenever we get a loan from another bank, and it happens a lot, and they say, hey, listen, I've already got an appraisal. Well, if it's a conventional appraisal, it's a system. If it's an FHA appraisal, it's a different system. Because in FHA, you have to go through what's called FHA Connect. And once you get to FHA Connect, you say, hey, there is a appraisal associated with this property. And FHA says, yup. And they say, cool, who's the appraiser? And it's Bill Smith. Okay, Bill Smith. Is Bill Smith approved by New American Funding? If they're not, then I can't accept that appraisal. But then we do the next thing. We say, hey, Bill Smith, can you submit all of your paperwork so that we can get you approved by New American Funding? And that 80 to 90% of the time, thumbs up, yes, it happens. 10% of the time, we can't. So it's rare, but it has happened in my past, and we do that. So there's a process that it has to go through, and all of this is to avoid the Big Short.
Okay, guys, so we've gotten a little bit of on our feed, so we need the love right now. We need to get out there. We need to get into the algorithm of this. So all the hearts that are coming in, I appreciate it. Keep hearting, keep liking, keep sharing. We're going to try to get more people in here to ask more questions. There is a ton of questions in here. We're going to get to each and every one of you. Just hang tight.
We're going to answer your questions. We're going to answer them. We're going to answer them, dude. We're going to answer them.
Thank you for the love, Candy.
Appreciate Candy. We thank you very much.
Ms. Carnell, what are lenders looking at when asking for your tax returns? Why not just the W-2s and check stubs?
Good question. Ms. Carnell, there's two different types of loans I can go with. Oh, there's a bunch of them, but two that I'm thinking of at the moment. One of them is a W-2 only, where I only look at your W-2s. That's it. I just go, hey, let me see your last 2 years W-2 and your most recent paycheck stuff. And I can submit a loan. But you know what? That loan's going to have not the best pricing and not the best terms. Because it's a W-2 only loan. Why? Because you've said to the bank, hey, I don't want you to see what I'm doing. You can see what I earn, that's it. But I don't want you to see the rest of it. Because on the rest of it, I could have wrote off everything. And get down to like, I made 100 on the top, W-2, and then through my businesses, my independent ventures, and everything that I had, my tax deductions, I netted 20 grand. Well, when you say, Mr. Bank, I don't want you to see this, they say, hey, you know what? Because you're W-2, we'll take you, and we'll let it move forward, but we're not going to give you the most favorable terms. Your interest rate isn't going to be the best, and your terms aren't going to be the best. Now, the other loan type I was thinking about, it's called a full doc loan. Full doc loan is when I see all of your 1040s, I see everything you wrote off, I see everything, and then I submit that, and then that's going to be the most favorable loan that you can get.
I'm going to piggyback on the first one.
All right, cool.
Many times people use their self-employed business to take losses. So if you're saying you made $100,000 W-2, those losses go against the W-2. And the underwriter is going to pull transcripts anyway. So we're going to see it. We'd rather head it off at the beginning than deal with the problem in the end.
Oh, yeah, don't lie to us.
Candy, you're welcome. CNC Designs. BlackRock, you're right, man.
Yeah, BlackRock, you're right, man. If you really dig in, there's two big companies. Who are they?
Vanguard and BlackRock.
Vanguard and BlackRock. And they're buying up like it's insane what they're doing.
Dennis, back in. 44% is crazy. Creating a housing crisis. This is a conspiracy documentary.
I'm telling you, it is. I think the whole world's a scam. If you've been watching me for a while, Dennis, and I know you have, I think the whole world's a scam, but the only way to navigate within it is learn the rules and bend them like an artist.
Yep, Ryan, you're right. Investors driving up home prices 50K plus over market.
You're correct.
Something Murillo, how it works when wife has LLC and husband has W-2.
So, you guys have different methods of income. W-2 straightforward. My company pays me this, they report it, and this is what I make, W-2. If you have an LLC, that's a whole different thing. Because if you do, we don't know who owns the LLC. You're going to tell me, well, wife owns 100%. Okay, cool. Well, then I need the 1120s and the K1s. 1120s tell me what the corporation made and then what they wrote off. The K1s tell me exactly who is the owner of the corporation. When I ask for the 1120s and the K1s, I then do a full corporate income breakdown and then flow that through via the K1 to the income of the borrower. Sometimes it shows up on the 1040, but it's not mandated. You can actually, instead of paying your officers, you can keep that in the corporate stock or in the corporate kitty bank account. And if you do that method, sometimes I can use that money as your income.
Yeah. Candy, how would it help having a cosigner?
You take it.
Cosigners sometimes are necessary, sometimes not. But what you're doing is you're adding income to the file. Give you an example. Let's say, Candy, you wanted to buy a $600,000 house. I added in your income, I added in your debts, your down payment, factored everything with an interest rate, and said you can only qualify for $400,000. And then you ask, how do I get to $600,000? And I say, pay off all your debt. And let's just say that equates to $40,000. And you'd say, I don't have $40,000. Well, if we can't minimize debt, then we have to increase income. That's where a cosigner comes in. So a cosigner is going to add the income. And yes, we do factor in their debts as well. So your cosigner does need to be a strong borrower as well. But many times, a little bit goes a long ways. A lot of people think, well, my co-borrower needs to make $100,000 a year. No. If your co-borrower adds, call it $30,000 a year, we're adding about $2,600 a month. And they have one car payment for $500 a month, we're still adding $1,000 a month to the file. And that could get us to where you want to go. So cosigners, very necessary in these markets with high interest rates and high prices. Hope that answers your question, Candy. Alyssa B, how does it work for an LLC to buy more houses with the equity from the houses owned?
Alyssa B, it works pretty simple, but you can't use us, and you can't use Fannie Mae, and you can't use Freddie Mac, and you can't use FHA, and you can't use USDA, and you can't use VA. Alyssa B, when you are an LLC, you're a corporation. And if the corporation is applying for a loan, that's a corporate loan. If you're going through as a person, I want to buy a house, well, then there's a set of loans out there called conventional conforming loans, and that is VA, FHA, USDA, Fannie Mae, and Freddie Mac. So there's a few others, but those are the main ones. And those are only for a person. They're not for a corporation. Now, you can make your income through a corporation, but even if you make your income through a corporation, you still file a 1040 as a person. So I'm able to use that income that flows through from your corporation to your 1040 as a person, and we're able to do the loans as a person. But if you're trying to buy loans through your corporation, you're in fantasy land, or you're way beyond what we talk about in here.
Thank you all for the likes and shares. Time for a commercial.
Appreciate you. If you need a badass loan, call Badass Loan Officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing numbers on the screen right now. This is going to disappear in 5 seconds, so you got to screenshot it. 54321 bye.
Boom. All right. Thank you for the love, everybody. Lourdes.
Florida, Polk County. We appreciate Florida.
Candy coming with all
love
kinds of
Florida.
stuff.
Candy's kicking it, man.
I love Florida.
Yeah.
You're right.
Candy, you know what? Florida. You guys just passed an anti-squatter law. Boss, man.
DeSantis
that
for
is
president.
Boss. It is boss.
Maybe not this run.
There's going to be a whole, you know those guys who repo cars? You know, there's a show on it. There's going to be a show in the future of people who kick out squatters. I promise you, there's going to be a show because it's entertaining already.
And that one sheriff that's like, hey, it's okay to...
Oh, yeah. He's like, hey, do us a favor. If somebody enters your home without your permission, make sure you pew real good on them so it saves us a lot of paperwork and time. Appreciate you. I appreciate you.
Thank you for all the love, guys. Yeah. Lourdes and Candy, that's awesome.
Thank you, Candy. Thank you, Candy.
Miss Carnell, I missed the answers about tax returns. Why tax returns needed?
You take it this time.
Okay, so tax returns are needed for a number of reasons. One, depending on the program that we're going with. And if you're doing traditional financing, VA, FHA, Fannie, Freddie, that type of stuff, we're looking for self-employed income and losses. That's the truth. A lot of people take their side gigs, side hustles, and they write everything down to the negatives. So let's just say that you made $100,000 a year, but you had $20,000 loss on your side hustles. You really made $80,000 that year. So if you don't give the taxes, we just want to look at them. We just want to see it on the front end, what the challenge is going to be. Because if you don't show us and you try to hide it, They're going to find it on the back end. They're going to ask for transcripts. We're going to order them. They're going to see losses somewhere. Then they're going to request your taxes. You may not get that house because you don't qualify. So always good to be upfront with your loan officer at the beginning because we can save you hassles in the end. KQ5, how does a gift of equity work with my grandmother if she has a reverse mortgage?
Good question. So there's a reverse mortgage, okay? So you have a fair market value. And let's say the fair market value is $500,000. So that house can fetch $500,000 on the market right now. But then you have a reverse mortgage. And the reverse mortgage is probably going to be at least half of it, $250,000 or more. So you have to take whatever is owed. And the only way to do that is call the bank and say, hey, how much do we owe you? And if you call the bank and the bank says, hey, you owe us $450,000. So now your fair market value of your house is $500,000. You have to subtract $450,000. What is left is the equity on the house. So you have $50,000. If you are going to do it where she gifts you the house, well, you got to pay off what is owed, $450,000, and she's going to give you a gift of equity for $50,000. So that's basically how it works.
Okay. Cisco V, how do I calculate how much home can I purchase on my own? You want this? Want me to take it?
You take it.
Okay, I'll take it. So here's an easy way to find it. So I'm going to show you FHA, okay, just for housing. Take your total monthly income. It's got to be gross monthly income, and you have to calculate that correctly. But if you take your gross monthly income and multiply that times 46.99999%, that's your max mortgage payment that you could have, your max mortgage payment. The second thing you need to know is how much is every 100,000, because I don't know what market you're in. You could be at 100,000, you could be at 2 million, depending on where you're at. Okay, so your average $100,000 mortgage payment is going to be in the neighborhood of about $850 per 100,000. So 8, 16, 24, 32. You get what I'm saying. So that's how you calculate it. If you have any questions, you know who to call. Instead of guessing, let's put the file together and give you the correct answers. Ryan, I just got out of the Army, now work on base at CIF. Can you see my income from CIF even if I don't have a 2 years?
Yes, Ryan, you're probably one of my favorite buyers to work with, because if you just got out of the Army, you're a veteran. Thank you for your service. Appreciate you very much. I'm a veteran. My dad's a veteran. My son's active duty Navy Special Forces. Very proud. Anyway, so you're one of my favorite guys to work with. Here's why. Because we can use the VA loan. The VA loan is the most powerful loan in the system if you know how to use it. And if you just got a job, but you came out of service, I get to use the time in service as your 2-year history. So your new job, all I have to do is say, hey, it's your full-time job. This is what you make. Calculate your income. Cool. I'll need your W-2s from your last 2 years in the Army and your, oh God, I just spaced it. What's it called? LES? LES. I'll need your LES, your last LES, and your DD-214, and then we work on getting you a house. Got a lot of really, really, really good tips for you too.
Look at all this love, Candy.
Candy, you're becoming one of our favorite people real fast.
Guys, we're at 3,500 likes. 10,000.
Real fast. Real fast. Appreciate you.
All right, Elite Joshua. Speaking of appraising property, how are they saying that Trump overhauled his properties?
Okay, so I don't want to say that word. Don't say that word because they literally
that's how we keep getting.
We get slapped when we say anything that has to do with years on the planet or ex-leaders of the free country. We get slapped. We get literally. There's a little diamond that says you can't talk about this stuff. We will suspend your account. Literally happened. It's weird, but whatever. Anyway, so I think it's a bunch of crap, Elite Joshua. It's crap. Here's why. If I say, hey, I think my house is worth $7 million, $7 million. And the banks go, that's cute what you think. That's cute. But I'm going to say my appraiser. All right. My appraiser says it's worth $600,000. I know you think it's worth $7 million, but my appraiser says $600,000. And because we're the bank, we'll lend you based off of what the appraiser says. Now, there's what you said, and that's cute. And I'm sure you have your reasons. But the appraiser said $600,000. So we're going out $600,000. That's how it works. Yeah. And that's what happened. And it's so crazy because
a judge actually.
Yeah, it's so transparent hit job. It's horrible. Even Mr. Wonderful from Shark Tank said, hey, if this actually flies, you're going to destroy the real estate market in New York. Going to destroy it because everybody is doing this. Yeah.
Look at it this way. So Mike Trout, one of the best baseball players in the league right now. Okay, you buy a Mike Trout jersey from your sports store, or you get Mike Trout's actual jersey that he wore. Which one's more valuable? Okay, it's gonna be the one that he wore. Trump has a brand.
It's dirty.
Sorry, he has a brand. And Mar-a-Lago itself is more than just what is it? What is it actually? Country club. It's more than a country club. Anyway, Cisco V.
Yeah.
Oh, what are you gonna say?
I was gonna say I agree with you. Elite Joshua 1 or whatever that is. Yeah. Elite Joshua 1. I agree with you. I'd really like to talk about this stuff, but I can't on this feed because they'll slap me. And I would like to because I can get into this deep.
It's LT Gray Joshua 1.
Okay.
Cisco V. Can I help my wife who has no credit get approved for a credit card easier while I have a 760 FICO score?
Cisco V. I can do one better. You can add her as an owner. If you add her as an owner of one of your credit cards, she now has a credit card. And if you wait probably 30 days and she applies for another credit card, the other credit card's going to pull her credit and go, hey, you got a credit card. You've been paying it pretty good. That's a hack.
Right. Lord, thank you for the love. Deborah Sheen. My husband has never used his VA when he was discharged in 1981. He has a certificate for $250,000.
So...
There's more. We've never bought a house before, so we don't know what to do.
Deborah,
place.
you came to the right place because here's what the answer is. It's real simple. You're going to call me. That's it. You're going to call me. I'm going to tell you that your $250,000 doesn't mean anything because the actual term on what's called a certificate of eligibility on a full boat certificate of eligibility is $36,000. $36,000, but that doesn't mean anything either because what really governs it is called the county loan limit, and if you've never used it, there is no limit on your VA loan. What? Yeah, about 2 years ago, the VA changed the rules, and they said, hey, there is absolutely no limit. There used to be a limit. It was $398,000, then it went to $471,000, and then it got up to pretty high for a little bit, and then the VA said, we're just playing games. Why? There's rules on it, but if you've never used it, there is no limit on your VA loan ability. None. There's no limit. I've done million-dollar homes, multi-million-dollar homes on a VA loan. Multi-million-dollar homes. Now, that's not to say you qualify for every loan. That's no limit on the loan. Now we have to qualify you based on your income. So even if you could buy a $10 million house because the VA says so, your income may only say $400,000. So we have to go by the lower of the two, obviously. So if you qualify for a $400,000 house, we'll get you a $400,000 house. If he served and he got out in 1981, I appreciate you very much. You were probably during Iraqi freedom. I know because I'm a veteran during that time frame. I know the years. I appreciate your service, and we will help you every step of the way.
All right. Elite LT Gray Josh said, my mistake. I don't know what your mistake was, but thank you for joining. Petite Flower. I sure hope you're not a big burly guy.
Hey, my petite flower. He's like, thank you.
Any new down payment assistance in California right now? Hold on.
Oh, here we go.
You guys need to take a seat. Grab out a pen. You're going to be locked in for a few minutes.
Petite Flower. There's this new program out here, and it's being sold like a big dog. And here's how it sounds. Hey, state of California is going to help you because they want you to be a homeowner. They want to help you own your piece of the American dream. Here's what they're going to do, 20%. Yeah, what, 20%? Yeah, they're going to help you at 20%. Wait a minute, what do you mean 20%? Okay, so if you're buying a $500,000 house, 20% is $100,000. So the state of California is going to help you with $100,000. Oh, that's amazing. That's like almost like an uncle. Yeah, you could call him Uncle Kelly if you want. Uncle Kelly is going to help you with $100,000. $100,000. Wow, that's amazing. I love this. Okay, cool. So the $100,000, that's amazing. I love it so much. All right, thank you, Uncle Kelly. You're welcome. Uncle Kelly's here for you. You're welcome. We're in business together. We own some real estate. Wait a minute. What do you mean, Uncle Kelly? What do you mean we're in business together? We own some real estate. Oh, you think I'm giving you that $100,000? No, don't be stupid. Don't be stupid. No. We're buying this house together. Yeah, I'm putting $100,000 in, and the rest you're borrowing. But I'm putting $100,000 in. I want that $100,000 back. Okay, Uncle Kelly. When? Oh, don't worry about it. I'm not in a rush. Don't worry about it. Whenever you sell it or you refinance, you can give me my 100 grand back. I'm okay with that. You can wait. You can wait 2 years, 5 years. Hell, you're a human being. You might make 90. I'm a state. I'm never gonna die. So I could wait till you die. I'm cool with that. I could, yeah, 100. Yeah, no worries. 100 grand. I'm here for you. And, oh, by the way, one more thing I forgot to tell you. I want interest. No, screw interest. This is California. Our houses appreciate quickly. I want appreciation. I want my share of appreciation every single year. And one more thing. If when we sell, only one of us gets made whole, it's me. I get my money back. Yeah, I want my, yeah. But you know what? We own a piece of the American dream now. Yeah, well, yeah, it's your Uncle Kelly, man. Your Uncle Kelly's here for you. Yeah, that's it. It's a dream. Dream. You know what? I want all the people in California to have this dream. I'm going to call it Dream for All. I'm going to call it Dream for All. I want everybody in California to have this dream, and Uncle Kelly's here to help you. Is that a real program? It's a real program. It's happening right now.
It's the biggest program being pushed in California right now. It's actually the only one that I've ever heard anyone call me so many times asking about. They're putting so much marketing behind it.
Yeah.
That being said, for the few that it helps, good for them.
Yeah.
Also, Petite, you need to know that there's other programs.
Yeah.
Every one of them comes with strings attached.
Yeah.
Some of them are okay. You know, it's up to you. We're not going to judge. We're just going to lay it out and let you know what's available and what's not. But she says, or Petite says, ooh, wait, there's some fine print. I thought so. Too good to be true. Oh, no.
Yeah. I'm not a huge fan of the down payment assistance programs. I will say that if you need them, and it means the difference between you getting a house and not getting a house, I prefer you use a down payment assistance program. But if you're thinking there's free money, or you actually believe the state of California wants to help you, I just no. It's not the way the world works. It's not the way the world works. There's a catch somewhere, somehow. There's a catch. Even with your straight DAP, your CalHFA, with your Platinum, with your Sapphire, with your all these different programs, there's some catch somehow, and I'll put it out for you. I'll tell you what the catch is. I don't give a shit. That's well, yeah, I do, but I don't give a shit about.
Give the truth.
I give the truth. Yeah. I give the truth, and I don't spin it like when should I refinance? Well, if you're a brand new loan officer, you want to refinance every year because you make $5,000 to $10,000 every time they refinance. I'm not in that boat. I'm like, hey, listen, I'll give you the facts. If you use me, use me. If you don't, you don't. So what? You know what? There's one time you should refinance when the interest rate is the lowest it can possibly be. When is that? I don't know. I can give you the data. I can tell you what the Federal Reserve is saying. I can tell you what their plan is. I can tell you when they think it is. But I don't know. No, who knows?
All right. Amy Jungle X, do you do home equity loans?
Yes.
If so, curious, what do you think if the property values drop in the future? Amy.
So, do we do them? Answer, yes. Do I think the property values are going to drop? Amy, not a chance. They might dip a little bit. But they're not going to drop. There's no possible way. Do you know how many people have been telling me that the housing market is going to crash for the last 10 years?
Millions.
They've been telling me all the time. I hear, hey, I'm waiting for the crash. I'm waiting for the crash. I'm waiting for the crash. In the meantime, if you actually watch what's going to the prices, they're up. Did you know year over year, houses are up 6% this year, even though people are saying it's crashed? We're the highest interest rates we've been in 22 years. And if there was ever a time for a crash, it would be right now. Housing prices have gone up year over year, 6%. Year over year, 6% across the nation. There's a few spots where they went down, a few spots. But overall, housing has gone up. Why? Because most people are house locked. House locked, what is house locked? That means 4 years ago, 5 years ago, I bought a house for $500,000 with a 2.5 interest rate. 2.5 interest rate. You know what I'm paying? $3,000 a month. $3,000 a month for my $500,000 house, but my $500,000 house isn't worth $500,000. It's worth $850,000. What? $850,000? I'm paying $3,000 a month. Well, I'd really like to sell that, take that $350,000, put it in my pocket, and get another house. But in order to do that, I have to buy an $850,000 house. And you know what that mortgage on an $850,000 house is? $5,500, $6,000. Wait a minute. I'm not going to give up my $3,000 a month payment so that I can take $350,000 and then pay $6,000 a month? That's stupid. That's where most Americans are right now. You believe it? You agree?
Yeah, absolutely. Absolutely. And Amy, they're not going to let you borrow 100% of your property value. So
Yep.
there's still going to be equity left in the home.
Yep.
So the adjustments are made. It's going to be covered.
Wait, you mean the banks are smart?
I think they got a handle on this.
They
man.
got a handle on it.
Vote for Pedro. Hello, gentlemen. Is a 2.75 origination fee for a DSCR cash out reasonable? Thanks.
You just put the origination word
I
in
did.
there. Yeah.
I did because he
Yeah.
didn't know to.
Yeah.
I
Okay,
clarified
cool.
what he's
All
asking.
right, cool. What do you think?
It's typical.
Yeah.
It's typical. You're going with non-QM mortgage. This is non-traditional financing,
Yeah.
which means how does the bank get paid? How does the bank make money for these transactions? They ask for these upfront fees. Very common, and very common for down payment assistance as well, okay? I will let you know, though, that if you're interested in getting a down payment assistance program, that right here at New American Funding, where Chris and Lee work, we have a down payment assistance that charges 0 origination.
What?
Not like these 2%. Yeah. So if you want a down payment assistance, won't cover closing costs, but if you want a down payment assistance, this is the place to get it. Who else we got here? Amy back in the house. That's why I asked. Prices are surging. So many naysayers bringing up the bubble.
Yeah, there's a lot of them. You know why? This is a part of humanity that's important. Okay? So, if you've ever raised a child, or have been a child, one of those two, if you've ever raised one or have been one, you know that when you're like 0 to 1 years old, you know nothing. You need somebody to feed you, bathe you. You need, and as you get older, you're not worried about the things that are good. You're worried about the things that are dangerous. So it's a human thing. Why? Because, well, that dog will eat me. Oh, I got to watch that dog. What about that fun puppy? That's fun, but the one that I got my attention is the dog. Well, how that manifests as you move forward, how do they get you to click on something? The world's about to fall. Oh my God, the economy's about to crash. We're on the edge of war. Oh, there's a doomsday clock. Oh my God, we're not going to make it. Oh, the eclipse, that's it. There's going to be solar burnouts and all the infrastructure is going to fail. All the cell phones are going to stop. All computers are going to go blank. None of the cars are going to stop during the solar eclipse. That was really happening. That was like 3 days ago.
Yeah, your cell phones aren't supposed to work.
Yeah, all that stuff is going to happen. You just sell everything right now, because the only way they can really get your attention is to scare the shit out of you. And after you've been around for long enough, you're like, yeah, sure, the solar eclipse is going to fry all the cellular networks. Oh my God, the banking system is going to crash because of the solar eclipse. When you get a little older, you're like, that's stupid. It's just stupid. But it does get clicks. And I will tell you, I love to watch these things. They're like, hey, did you know your cell phone could stop? You should put it in a bag right now. You should put everything in a Faraday cage so that it doesn't get fried by the EMP that the Russians are sending over during the solar eclipse and are going to blame it on the Chinese. What? Yeah, that kind of shit is happening. So, as long as these naysayers are telling you, hey, the market's going to crash, don't believe me, it's going to crash, it's going to crash, it's going to crash. If you've been in the business long enough, and we're in real estate, so we have to listen to it all the time. We hear it every day, all the time, every day. Hey, I'm waiting for the market to crash. I'm like, okay, cool. That's not going to go well for you. It's not. And they're like, okay, justify. And when somebody can actually justify, it usually hits them in the face. And they're like, all right, let me think about it. And it takes them a while before they come around to realizing, hey, those are kind of facts. Yeah, hey, the solar eclipse isn't going to cause an entire collapse of the U.S. economy. What? It didn't? Oh my God. And if you watch the videos, there was people saying that it was going to.
Yep,
Anyway.
Yep. Guys, if you guys are interested in getting started on your home loan journey, go to the link in the bio. Click on apply for a home loan now. You can get the process started while we're here live. I'll give you a call as soon as we're done. Or screenshot this and give us a text message or shoot us a call. We'd love to talk with you guys. And if you have crap credit, go to the link in the bio and start working on it, guys, because you don't want to start working on it when it's time to buy a house. You want to do it ahead of time. Make sure your credit's in line. You're going to go to the link in the bio, click on Fix My Credit, get this process started.
And crap credit's a technical term we use all the time. You have crap credit.
It's part of the test that we take.
Crap credit. You're like, hey, so what would you call crap credit? 620, 720, 820,
you know what your credit
or
is.
520? And we're like, I'm going to go with D, 520. That's crap credit. Cool.
You
yep.
know.
Yep.
Amy
so,
Jungle,
where are
back
you
in the
guys
house.
at? We're here for you. We are here for you.
Amy Jungle says, good point. I do a lot of HELOCs and get pushback because of the
Sensationalism.
about housing bubble.
Yeah, there's no housing bubble.
Where are they getting their data?
If you actually understand the numbers, we are still reeling from the 2008 crash when it comes to an inventory perspective. We have not built enough houses in order to facilitate the population. When the crash happened, we were probably 250, 260 million people in America. We are now 330 million people in America. Because there's 330 million people, if you just divide that up into households, there's a mathematical formula that says we should have built this many houses. This isn't brain surgery. If you follow how many houses are built, hey, guess what? The government follows that. They actually have something every month called housing starts. Why? Because in order to build a house, you have to go to the county. The county has to say, yes, I approve this, either the county or the city. And then once they say I approve this, they actually send that to the federal government, and the federal government tracks this stuff. So we actually know how many houses are being built. We also know what the population is. We know what the age of the population is. And if you put all these data points together, you're going to find out, hey, there's way too many people for not enough houses. What is that? What that means is that even though the interest rates are at all-time highs, because these people need houses, the market doesn't crash. We're a long way from being oversupplied with houses. And it's not just like, hey, let's really quickly build some houses. It's a lot to build houses. It's a lot. If you've ever built one, even if you're amazing, it's going to take you 6 months. If you're amazing, it's probably going to take you a year to 2 years to build a house. But if you put all these data points together and you go, hey, listen, there's a housing crash. No, there's not. There's not a crash. There's not a crash. If you could prove me wrong, I will love to see you prove me wrong, and it will also destroy our career. But I would love to still see you prove me wrong.
So here's the other thing, guys, is that there's fail-safes all over the place. There's fail-safes all over the place. They've already implemented strategies, so if this stuff is going to happen, something will trigger, okay? It happens in the stock market, happens in real estate. A lot of people will say, well, what about the 80s crash? What about the 90s crash? What about the 2000 crash? If you pay attention, they're all different, okay? They're not the same. There's different reasons for these crashes. The one that all of us can reference is the one in 2008. That's what we can all reference. And if you're referencing that one, those loans do not exist anymore. Yeah. And there's fail-safes that were put in place. We're doing full doc loans now. We're no longer doing those liar loans or those ninja loans or there's different types of loans that were out back then. They don't exist. Now, for investors, similar loans like that exist, but guess what they're doing? They're putting 20% down.
Yeah.
Those loans were asking for zero downs a lot of the time. It was 80-10-10s or 80-20s. 80-20s. It was 80-20s back then, so it was 100% financing. Francie M595. Good afternoon. Your office does home equity loans as well?
Yes, we do. We do HELOCs, we do second mortgages, and then cash out refinances, and we'll give you a logical reason why you would do any of them. And also, they're not great loans. They're not great loans. I mean, people are like, hey, I heard you can get a 5.625% interest rate. I'm like, yeah, if it's your primary residence, you have an 800 FICO and a 24 DTI, and you're putting 20% down or more, yeah, you can get that rate. That exists. But if you're looking for a HELOC, 9, 10, 11, 12, 13, 14%, that's what it is.
So what are you guys' questions? What do you guys want to know about? What do you want to learn about? Whether it comes to credit, down payment, how much money you need to make, different programs, down payment assistance. What about for you investors? We have 1099 only. We have DSCR. We have reverse mortgages. Oh, the NAF cash. The NAF cash is a big deal.
Tell us about the NAF cash. What is NAF cash?
Oh my gosh, it's a big deal. We actually have one in escrow right now as we speak. So here's what it is, guys. As the competition starts coming in, I'm going to call it June. It's already starting, but the big wave is going to be in June because from what the experts say, that's when the first rate reduction is going to happen. And when the first rate reduction happens, more buyers are going to come in. Second one, more buyers. Third buyer, it's going to get crazy. So how do you get an offer accepted if hundreds of people are putting an offer in on one house? Here's how. Cash. You need cash. But you're going to say, but I'm financing. I only have the minimum down payment. How do I do cash? Well, what we do is we take you through the underwriting process, make sure you're underwritten and you're able to buy a house. Then we get you to a different process of approval. It's called our NAF cash department. Our NAF cash department is going to say, is this person worthy of us buying the house for them cash so they can put in cash offers? So and then they thumbs up and they say you're approved. So now you have a cash approval. Your agent's going to be putting in offers in cash, which means you'll float to the top of the picking, okay? Because they're going to pick a person to buy this house. Let's say top 5. There's going to be other cash offers in there too, and there's going to be people that are putting a lot of money down. Maybe they're already approved. But if they pick yours, we at New American Funding are going to buy the house cash. Now it's your house. Then we go through the financing situation. So it's traditional financing. There's no funny business. New American Funding doesn't want to own the house. They don't want to keep it. They want to give it to you. We're in the business of doing loans. So they'll buy the house cash for you, and then you finance it later. But that will give you an advantage, a big advantage, to get your offer accepted, especially when there's big competition. So that's not cash.
Super easy. 920. I'm going to get to Rabbit in just a second, but super easy. It's a fast answer. 5.75 is what New American Funding is putting out on the website. Don't believe me? Go to the top where it says links. Go to cool stuff and then today's rates, and you're going to see 5.75 on a VA loan. Now, Rabbit, multifamily. This is what it's called a house hack. What? Change that. They just changed the rate. Rates went up to 6. Ooh, CPI came in horrible today.
No boy,
Ooh,
no.
everything's going up. Everything's going up. Yeah.
Second, man. Let's talk about that.
Okay, so four unit. If you go VA, you can get a 4-unit. Live in the primary, rent out the other 3. If you go FHA, you can get a 4-unit. Live in the primary, rent out the other 3. If you go Fannie Mae, you can get a 4-unit. Live in the primary, rent out the other 3. Freddie Mac, primary, rent out the other 3. USDA, I don't think so. So here's the catch. There is an overlay on there that says when you make your mortgage payment, it must be at least 25% of the overall mortgage payment. So that is an overlay that has to be factored in. But here's the truth of it. When you find that actual unit, first off, it's a unicorn. It's hard to find that 4-unit where you can move in one and rent out the other 3. But it does happen. It happens occasionally. We won't call it a unicorn. We'll call it a 4-leaf clover. Unicorns don't exist. 4-leaf clovers do. So you find that 4-leaf clover and you're like, hey, let me do this. And then I run the numbers. 90% of the time it works. If it doesn't, there's some things that we can do to make it work. So I've seen some loan officers come on here and say, hey, that doesn't exist because of this. And I'm like, that guideline exists, but there's a way to get around that guideline. So yes, can we do it? Yes, we can. Do we do it? Whenever we can. I love to make that happen.
Yeah. Francie, looking into home equity loan to get down payment on our second home. Can your office do both? Yes.
Not only can we,
Yes.
we want to do both for you. It's better. Here's why. Because if you pull your credit, every other bank that's going to pull your credit is going to know what bank pulled your credit. That's the way the system worked. And if you go to Wells Fargo and you pull your credit for a home equity line of credit, then you come to us and you pull your credit for a primary or a second home, well, we're going to know, and then there's going to be some kind of question in the background. Why are there 2 banks working on loans at the same time? So it's better if you go with the same bank, because this escrow talks to this escrow, and we say, hey, upon closing of this escrow, we'd like to take those funds, put it into this escrow for the new purchase of the second home. Happens all the time.
Yeah, Dennis the Tech Guy is back. Can you explain lender overlays on FHA and other programs using New American Funding as an example?
You go.
Okay, here we go, guys. So here's the answer, Dennis. 1, New American Funding doesn't have overlays, okay? We don't have overlays. We go off the raw guidelines from FHA, VA, Fannie, Freddie. We're direct. We're called direct, which means we don't have those overlays. Overlays are when you're a newer bank or you're a bank that hasn't done very much volume, okay? You haven't shown these entities that you can put out these loans and underwrite them on a consistent basis that follows the guidelines. So what they do is they put overlays, which means FHA with us is 580. Many other places out there, FHA is 620, 640. So the risk is much less on these banks until they can show that they're able to put out these loans properly underwritten, showing that they're doing everything the right way. And the way they know that is FHA going to buy the loan? Okay, they go to the guidelines and they go, wait a minute, this person has a this and a that, doesn't meet the guidelines. They kick it back, and now they kind of got a black eye. So if you can show the consistency that you know how to do loans and you can underwrite them properly, you can get rid of the overlays and you can become direct like we are. I hope that helps you, Dennis.
Yeah, and there's some things that happen in this process. When you're a brand new bank, and this is not to beat on brand new bank because there's nothing wrong with them.
Everyone's new sometimes.
Yeah, everyone's new sometimes. And even credit unions. Credit unions say, hey, listen, we're going to service all the purple people in this area because they work on the purple trains. Okay, cool. So the purple people work on the purple trains, so our credit union is for these people. And I guess we'll do some FHA loans too, but that won't be the primary brunt of our business. So the bank goes and says, hey, we'd like to do some loans with you. FHA says, hey, you don't do that much volume. So for the first set of loans, we're going to require a 640 FICO. And the credit union says, okay, cool. We'll just make sure that if we go FHA, we'll make sure you're 640 FICO. Then after you've done a bunch of them, they're like, okay, cool. We're going to drop that down to 620. Then we're going to drop that down to, you know what? We're going to train your underwriters to be direct. So they're your underwriters, but they have a CHUMS number that actually says, I'm direct through FHA and will authorize one of these people. And that's when you become FHA Direct, VA Direct, Fannie Direct, and Freddie Direct. But every small bank starts out with this process. We're like, hey, I want to start. And they're like, okay, cool, but we're going to put heavier overlays over the top of you as a brand new bank. And now the credit union is a different animal because sometimes credit unions use their own money. They bring all the money in from the purple people that are servicing the purple trains, and they're like, hey, we're going to use your money and lend your money back to you. So we get to choose the rules of those because we're not going FHA. We're not going VA. We're not going Freddie, Fannie. We're not going anywhere. We're going through our system because it's our money and we get to choose what we want. The only time they have to follow the FHA guidelines is if they use FHA, VA, Fannie Mae, Freddie Mac, and so on and so forth. So that's what an overlay is. When you get to be a big bank, New American Funding is in all 50 states, very big bank, very big bank. And because of that, we have FHA direct underwriters, VA direct underwriters, Fannie, Freddie, USDA. All of our stuff is direct. The banks is. And by the way, we work for the bank. We're not the bank. I don't own the bank. I don't.
Doesn't say Chris and Lee outside.
Yep.
Dennis, you're welcome. Yeah, the OGs love it. Francie, you're welcome. Connor, here we go. This is what we're going to talk about now. Do y'all hear CPI came in elevated? Do you think this will delay rate cuts?
Connor, that's an unbelievably great question. Unbelievably great question. Here's why. Because the Fed, chairman of the Federal Reserve, his name is Jerome Powell, comes out every once in a while, 10 times a year, and he speaks on behalf of the entire FOMC. These are all the members of the FOMC, Fair Open Markets Committee. And they have a set idea of where the rates are going to go, but it is largely determined by the market. And CPI has not been coming in the way they want it to. It has been coming in higher. As a matter of fact, yesterday I quoted 5.75 on the New American Funding website, 5.75. Today after CPI, it went to 6%. The New American Funding website is now putting out 6% with a 7.22 APR. What? Yeah. Why? Because now this is important, Connor, very important. The mortgage rates are not based off of the Fed funds rate. The Fed funds rate is the rate that the banks borrow. It's a little complicated, but it's the rate that the banks borrow from each other. The Fed funds rate is based off of the 10-year yield. However, the 10-year yield does get influenced by the Fed funds rate. And traditionally, there is a 100 to 150 basis point spread from the Fed funds rate, from the 10-year yield to the mortgage rates, which translates into today 6.5. Now, what is the Fed funds rate? 5.5. 100 basis points, 6.5. That's going to be about your average range. Now, this rate that New American Funding is putting out is with an 800 FICO score, 20% down, 24% DTI. It's a perfect loan. It's rare, but it exists. So they can put it out there because it exists, and they put the asterisk that shows it. However, they do control the economy, and there are 12 members on the Fed Funds board. Here's what they are saying over the next 3 years. Right now, they are in consensus that we should be at 5.5, 5.25. Those dots are each one of their votes. Next month or next meeting, this is where they are. The next meeting, they're spread further. The next meeting, they're spread further. But if you look at the trend, it's a downward trend. and they come to a consensus at about year 26, 27, end of 26, 27, with a consensus at 2.5%. This is not a secret chart. You can go to the internet, find it, see Fair Open Markets Committee. You will find it out there. But what that's to say is right now we are in second quarter of 24. We are anticipating the interest rate to go down all the way up until 26, 27, and then they come to a consortium again that we're going to be at about 2.5% on the Fed funds rate. What? Okay, how does that translate into mortgage rates? Fed funds rate, mortgage rate, 150 basis point ride, you should be somewhere in the fours. Should be somewhere in the fours. Now, these are the smartest people on the planet. These are not dumb people, and it's not one guy who has an agenda, who's like, hey, I'm anti this president or anti that president. It's not one guy with an agenda. These are 12 very, very smart people right here that come together and they say this is what's going to happen over the next few years. And this is important because this guy is saying, hey, yeah, it's going to happen. We're just not in a hurry. I am not in a hurry because if I overcorrect, we could have 1987 on our hand again. 1987, they overcorrected. Inflation went out of control. 18%, 19%. That translated into mortgage rates. And then it basically crushed our economy for years. Not for a couple of years, for like decades. And in 1987, the Fed made some really bad choices. Well, this guy's a student of that Fed time frame. And he says, hey, you know what?
Not going to do it.
We can pause for a very long time. I'm cool pausing. I'm just coasting. I'm not worried. But you will see the people freaking out every day. CPI is high. CPI is high. Oh my God. Why? Because it bleeds, it leads. If they say CPI is going to crash the market, everybody's like, oh my God, what are we going to do? I'm never going to buy a house. Oh, I'm screwed. I'm screwed. I'm screwed. Not really. Actually, if you really want to watch this stuff, PCE and jobs reports, non-payroll, non-farms payroll job reports, those are the big ones that you should be watching. PCE and non-farm payroll. But CPI gets a lot of data. It gets a lot. And it does have a little bit of impact. But you have to take it into account over the long haul. So, yeah, a little bit.
So look at it this way, guys. You're taking your kids to school. You're driving them to school in the morning. You can go at 100 miles an hour and get to school. Mm-hmm. Or you can drive the speed limit, stop at the stop signs, and get there safely. Okay? It's more dangerous to go fast. That's how they look at it.
Connor, I think you're an LO. If I'm not mistaken, I think I remember you're a loan officer. Is that correct? If it is, put it in there. By the way, we appreciate when other loan officers show up here. We appreciate realtors. Anybody who's trying to learn this stuff, if you can teach me something, prove it, and I will be a humble student. But if you can't, sit down, you might learn something.
No, Connor, he's saying that, so you're saying I'll never get out of my 7.75? You will.
Yeah, you're going to.
You will.
And by the way, if you're going to refinance, you should think about this. Refinance strategically. Don't do it when your loan officer says, because your loan officer is going to tell you, hey, it's 75 basis points lower. Why don't you refinance so I can make $5,000? Hey, 75 again. Why don't you refinance so I can make $5,000 and start your 30-year clock all over again? The right time to do it is to watch this stuff, watch the markets, understand it, be informed, find the bottom of the market. When you get to the bottom of the market, this should not be a shock to you. You have the ability to buy down your rate. You should have saved money for the last 2 to 3 years so you can buy that rate down ridiculously low. Ridiculously low. Do you have a rate at 2 point something?
Yep, 2.75.
2.75. I got one at 2.625, I think, because I bought it down. How much did yours cost?
20 G's.
Mine cost $22,000.
Why does yours always have to be a little bit better?
You think you think paying more money is better?
Mine's 2.25.
You think paying more money is better?
2.25.
I don't know if you understand
you're a
life.
one-upper. It's very clear.
I don't know if you know this,
Always
but
has to
paying
be a
more
little
money
bit.
is
I'll
not
tell you.
better. I'm 6'4".
See? Perfect example.
I'm not.
Francie, so
Yeah.
do we buy now or wait for rates to start dropping?
If you're smart and you're qualified, right now is the best time. Right now, because as soon as the rates start dropping, there's going to be a ton of borrowers that come in. Those borrowers are going to start chasing those houses, and the prices are going to go up. You can never change the purchase price. You can change the interest rate.
Okay, we're gonna be partners with Connor, man. He's coming to Riverside. To
Oh,
be a
that's
realtor.
right. That's how I remember him. Not an LO, a realtor. We want to help you.
All right, real quick,
Help
co-lapping
you.
King, can the interest rate reduction refinance loan really reduce rates lower than current levels?
No.
It cannot.
No. It's a trick question. I'm going to give you the answer, but I'm just channeling my cousin Vinny. My cousin Vinny. It's like, could those have made those marks?
To you.
No. They couldn't have. It's a trick. It's a bullshit question. That was my
More
best.
Jersey, more Jersey.
That was my best
More
Marissa.
Jersey.
That was best Marissa Tomei. That's best I could do. Anyway,
Marissa
it's a
Tomei.
bullshit question. You can't answer
Let's just
that
say Marissa
question.
Tomei.
You can't answer that question. Okay, so VAIRRRL is very simply this. It's an interest rate reduction and refinance loan, but it can only be done if it passes the net tangible value test. What's the net tangible valuable test? It is lower than your current rate, whatever your current rate is, has to be lower, and you have to recoup all the costs for that loan within 18 months. 18? I think it's 18, right?
I don't remember the months.
Don't quote me on the months, but you can quote me on the net tangible test. And if you have a 5% rate right now, well, first off, the rates are now coming in at 6%, so it's not lower. Doesn't meet the first test. No IRRL. There are no IRR unless you bought in the last 9 months, and it has to be over 6 payments, not 6 months.
210 days.
Not 6 months, 6 payments, 210 days. So 210 days ago, if you funded a VA loan and it's at 8%, and today I can get you in at 6%, that gets me past the first barrier, which is it lower? Yes, it's lower. Then I have to say, hey, this loan's going to cost you $3,000 to do. Is the monthly savings going to be enough over the next 18 or 36 months? It's one of those two. 18 or 36 months in order to make this loan worth it. That's called the net tangible value test. So, are you trying to do a VA IRRL now? Probably not happening. And if your loan officer is telling you that, bullshit. And if maybe they know more than me. If they do, I really want to talk to them. I'm sure there's people that know more, and I really would like to be a humble student. It's just impossible for me to find them. So please turn them on to me, let them shoot at me, and then I'm gonna be okay, cool, prove it.
It's been a blast. I'm Chris. That's Lee.
We've been Chris and Lee.